Good morning. Let me grab a coffee and we'll go. So look at this, it's kind of funny. Here's the music playing. I'm like, it's the same guy. So good morning, comment allez-vous, how are you? Yeah, welcome to Forex.Today, the YouTube community of more than 20,000, more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. That's TRADARS. That's QuantBox. Put them together. Yup. You become a smarty pants. Yeah, so anyways, very cool stuff. We got a good week in front of us. Ending with non-farm payrolls, of course, but there's a lot of other things going on. A lot of central banks are gearing up to prepare us for eventual cuts. That's cool. So there's a lot that we can go through. So let me know how I can help. My name is Wayne. Been trading a while. 20-something years as a trader. I'm a classically trained economist. Spent 5 years at a little private school called Harvard studying economics and finance. Why? Because I can. That's why. So anyways, I was saying at QuantBox this morning when I met with that group, it's just like I geek out on this stuff. And if you don't, but you want to be an investor and trader, well, I'll be your geek. I'm not your freak. I'm your geek. So anyways, cool. I geek out on this stuff. Love it. So let me know how I can help. Technical analysis, fundamental analysis. It's all good. It's all good. Let me know how I can help. I'm a humble servant. I am here to serve. Now, I got a lot of housekeeping to do before we get going. A lot, but it won't take long. So we are doing summer school this year, and consider it like scalping camp. You're going to learn how to pull the trigger. Bottom line, if you have fear and angst around pulling the trigger, we will fix you. Price action, scalping, volatility, it's all in there. But the thing is, it's very tactical and practical, but it's not going to be a boring lecture series. This is going to be very interactive. You're going to learn how to become your own coach. Okay? Yeah, so it's a roll up your sleeves type thing. Okay, you're going to love it. Now, let's start at the very beginning of the value chain. TRADARS way. Now I'm spelling. That's so good. All right, Trader's way. You need a broker, and you want, now listen to me, you want straight through processing offered by an ECN. If your broker is not an ECN and they don't offer straight through processing, you probably don't want to work with them. That's the bottom line. There are not many ECNs, but the one I recommend is Trader's Way. I've had a relationship with them for 10 years. Okay. Then the next step in the value ladder is education. 88 hours of training videos for $88. And they are lectures, and they're recorded, and they're good. Some of them are amazingly good. Okay, you got to have education. Otherwise, I mean, if we don't speak the same language, then it's going to be very difficult to communicate. Then the next step in your journey is adding fundamental analysis to your trading. So you look at things like this, and 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 you're able to take all that information and organize all your thought process into things that are logically good to buy, things that are logically good to sell, and everything else you should just ignore based on interest rate differential, employment, inflation, GDP, technical trends, seasonality, which is 20 years of price action, sentiment from retail, sentiment from institutions. Think about the confidence of your trading if you organize them based on logic. You can watch today's video if you want. I'm going to have to find that link for you. Hang on. I think it's youtube.com/quantbox. So you can watch today's video, except I haven't uploaded it yet. I forgot to do it. That's why you should just become a paid subscriber. You should just join. But anyways, you can get a sense of that. I'm going to try to upload it. I forgot. Sorry. Now, of course, if you're a paid member of QuantBox, of course it goes into your platform. Now, where am I? Where'd it go? Where'd the page go? So funny, that page disappeared. I think it did. How strange is that? Did I close it? Anyways, so let's go back. QuantBox, I'll bring that back up. So anyways, quantbox.co. Organize your thoughts. Be a confident trader. And then how many people were at the PCE event I did at FX Street on Friday? Anybody here? So PCE came out, and having looked at years of data of PCE, based on what happened with that result, what we saw was something like 60 or 70 something percent of the time in PCE events that came out the way that they actually came out. The past performance showed that the market went up for an hour or two and then collapsed dramatically. And that is exactly what happened. It was incredible. Okay. Now, what most people use TRADARS for is to do the grunt work of all the technical analysis. Okay, there it is doing all the grunt work. And it's looking at all these charts, anything that you want. But we got that data from sonars, which looks into the past volatility. So you get things like ISM manufacturing coming out. It does create volatility and it does generate patterns. Patterns of when it's less than consensus or greater than consensus. If it comes out as expected, there is no reliable pattern on this particular news event. And then, of course, what we did is we drilled down. Look at this. No scalp on Aussie dollar, but there is a scalp on euro dollar. And it develops the trade plan for the vol. 74% chance when the actual is less than expected, the 2-hour trend will be up. If it's greater than expected, 80% chance the 2-hour will be down. So there's a scalp. And I'm like, oh, really? Show me. And we can go right in. Right? We can see all the low closes under those circumstances. So it's really, really remarkable. And what we had seen looking at PCE going back years is a giant, like I think we went back to 2021 looking at patterns. And it said 2 hours up, 12 hours down. And that's exactly what happened. TRADARS is amazing. Cool. Amazing. So there's the value ladder. That's how I want you to grow in our relationship. Okay, now, something new at QuantBox. So last week, I introduced what we now call the money market tool that analyzes short-term liquid money. Okay, and you can see today we got a positive score on gold based on this analysis. So this is a new tool. It's really cool, showing us the hot money analysis. So, announcing today at QuantBox, more upgrades. We now have visuals on non-farm payrolls. We have visuals on weekly jobless claims. We have visuals on jolts. I just added this average this morning, in fact. Okay. We have visuals now on the unemployment rate. And again, I added the median average. And we have wage growth, and this is where inflation comes from. I added the median average, and you can see over this period, obviously we had spikes and stuff, but we are now dropping below the median average. Currently at 3.9, and over this period it was 4.0, but this goes back 5 years. You're like, dude, that's too far back. Okay, let's go back, zoom in a little bit. Wait, did I mess it up? I was working on this and did I reset it? Advanced. Let's do. Uh-oh, I did something to it to screw it up. No! Now it doesn't update. No, I messed with it. I knew I shouldn't have messed with that. Auto date range. Oh, my bad. I messed it up. Now it don't zoom none. Oh, or maybe that's what I did. No? I'm sorry. I'll have to figure out what I screwed up. But anyways, we got some nice visuals now, huh? So you can see, you know, we have a downward trend, and that is disinflationary. Cool though, right? Nice little upgrades. It's nice, right? Okay. So if I remember to upload the video to YouTube, you'll get the overview of what happened in the Commitment of Traders report, and it was interesting. Yeah, this was an interesting week for sure. One little tidbit I give away for free today: options traders went risk on, not just Treasury, right? Not just the bond market, but the options market too went slightly risk on. Uh-huh. Anyway, so that's QuantBox. It's beautiful. It's beautiful. It's beautiful. It's beautiful. It's true. Yeah. All right, you ready to go to some charts? Let's see what you're thinking today. And 56% are risk on. Thank you for voting. I appreciate you. I like the way you trade. Cool. Any requests? What assets would you like me to cover today? S&P. WTI. By the way, are you guys in summer school? Are you signing up? Come on, let's go. It's starting soon. Yeah. Someone actually postponed their wedding so that they can attend summer school. Well, that's not entirely true. He's not canceling his wedding, but he's going to be away for a while and then come back and watch all the videos. But nonetheless, he thought about it. And I said, no, she'll never forgive you. Yeah. All right. So thank you for that. We got yen, S&P, WTI, gold. No silver, huh? Gregor's oil and gold. Yeah. So oil's on the move because of OPEC. Okay, kind of looking at this dollar slightly weak over the last couple of hours. That's interesting. Little pop on yen, but that might be the opportunity we're looking for. If you were in my quant box presentation this morning, you know the ooh la la information I provided. They would make you either love this or hate this. All right, so let's move. I gotta move. I gotta move. Give me the juice. They say I sound like a chulo. All right, no silver though, huh? Well, look where we are, bruh. We're on my line. Huh? We're on my line. So, this is what I was teaching the day trading group last week. That you switch here. Let me delete this. Okay. You switch from uptrend to sideways. Sideways trend. It's not a bearish trend. It's sideways. And so if you're a bull, you buy at the bottom. Well, I already identified that, but it's also a pivot and it's also a psych. So you could have bought it at 30 and your first step is 32.50 and beyond if you're lucky. Oh, right on, Greg. Yeah, cool. Yeah, the market just opened, in fact. Why don't we flip over there and catch that? Check our vol on the NASI. I'm going to zoom on this one. I'm going to flip around like Flipper. And I'm going to do some traps. Look for a trap and break. Okay. Mark your territory. Okay, just going to zoom in here a little bit. Yeah. Remember, we got news at 10. So that means you'll have vol around all the way to about 1040. 1038, actually, but... Which stock market do you prefer to trade on the open? Or do you watch NASDAQ, S&P, Dow, Russell? Which one do you prefer? Oscar likes Nazi. We can zip over there if you want. Well, right, like Greg's like, hey man, why are you just staring at a 5-minute chart? Well, I already know what the other charts say. Right? So I don't need to watch 6 time frames anymore. It's like I'm either going to pull the trigger or I'm not going to pull the trigger. Betsy says, how do I know silver isn't a double top? I don't. And you never will, Betsy. Don't even think that way. Don't, right? And any YouTube guru that says they know this and they know that, they're full of it. So you never know. This is why risk management is critical. But the other side of risk management is knowing your bias. Whether you're a buyer of silver or a seller of silver. So you're on one team or the other, or you shouldn't be trading it, right? So it comes down to, like, I could argue this. Let's just say I flipped a coin and I'm bullish on silver. Not for today, but like this quarter, this year, or because inflation is higher than GDP. Because of that, I buy metals. Let's say I have some rationale, okay, Betsy? And so I could say I'm a bull, but the pattern we're looking at on silver is not bullish. So it's changing. But as a bull, I can buy at support as long as there's no lower low. So yes, we have a double top, but no, we do not have a lower low. So we've visited the previous high, and we do know that's support. I can buy at support. Now, it's not the type of support I prefer, but I can buy at the bottom of a side channel, of a sideways moving channel, right? Because it is support. I can buy at support. Now, if it goes lower, I lose a little bit of money and I stop buying. Simple enough. And then I walk away from silver. Silver is a place right now where I might hold my breath, but I definitely can buy. And my next choice is I buy it and take profit at the top of the range, Betsy. Or I could buy it and hope or anticipate, because of my bullish bias, that it breaks the double top and goes higher. Okay? But do I know? No, I do not know. You know? Okay, what do you think? It got the little role reversal. Everybody happy? Kicked off the moving average. Kicked off the role reversal. Little trap and break on the S&P 500. Cool. Easy peasy lemon squeezy. Make sure you use a stop. All right. Oscar the Grouch wants some Nazi. Let's put the trap and break on here. Is it going to be? Okay, there we go. And we'll do it on the fiver like I did on Nazi. There's my role reversal. Okay. Okay, and beautiful. Long and gone. Simple trap and break. I taught this at the day trading group last week, and people hadn't seen it in a while. And there was a couple of people that I think fell out of their chairs. I'm like, wait, you don't trade like this? Okay, you'll learn stuff like this in summer school. This is my version. And by the way, does anyone know the intense mathematics behind my gray zone? That's the pre-market open. It's time. Five, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. It's an hour before the open. Before the open. So anyways, there you go. So that's how you do it. So that's one little trick. You're going to learn so much at summer school. It's ridiculous. But there's other ways of doing similar things. That's all. All right, let's move. Let's go back to some commodities. Bitcoin, 70K. Whoop, whoop. Okay. Is summer school recorded? Yes, absolutely. Yeah. In fact, you know what I thought? It just occurred to me. I should take the stock trading course and put it in the summer school so you have two. Do you want a double summer school? Do you want like a 2-for-1? Because I don't think I put it in Investor Bootcamp, did I? Because we're going to teach you how to trade all the market opens. You're going to learn how to trade the Asia Open. You're going to learn how to trade the London Open. You're going to learn how to trade the U.S. stock market open. No? Okay. All right. Yeah, so there's our giant drop. Okay? Productions are high. Okay? Production is high. Economies might be slowing. There's a lot of mights going on here. Okay. And this is the take a break price. So we drop below 80. And if you were a bull, you need to stop being a bull. Simple enough, huh? Okay. 87% of retail is long. The technical trend is bearish. We are approaching the time of year in which, okay, so here's June. You see where we are? Maybe it'll be easier to see over here. Okay. We're somewhere between June and July, oil peaks. You see that? So, it's still trying to load oil. Oh, because it's got that spike in there. But anyways, somewhere between June and July, oil peaks. Maybe this year is different than the last, huh? Or maybe it's June this year. Over 20 years, you can see really it flattens out pretty quickly. So when we go back to the charts, for example, it puts a different spin on oil, where what if we peaked here? And we're projecting here, worst case scenario, we're on our way to 75 this week. Okay? Or best case if you're a bear. But Quantbox is neutral. And then you know that somewhere like in the next 30 days, one thing that's going to go from against oil is seasonality will be negative, and that might be the thing that turns this from neutral to bearish. You know what I mean? Okay? So how do you handle situations like this? Gold is definitely down. So is Quantbox wrong? No. That's what you would do based on the fundamentals. Okay, great. So is it technically an opportunity? No. You're like, but Wayne, you buy low. No, you don't. You buy higher lows. Do we have a higher low? No. You're too early. We're not even above the moving average. So you wait. This is not a good time to buy gold, even if Quantbox says bullish. Yeah. But what? You throw out technical analysis? Technical analysis tells you the right price and the right time to buy gold. Fundamentals tell you whether you should be a buyer or a seller of gold. So are you a buyer? Yes. At this price? No. Cool, right? Now you're a boss. How's South Africa doing? Well, right now, they sort of have a bit of a messy election cycle, and they're not being rewarded for it. There's uncertainty in the governance of the country. All right, well, the currency has fallen. Mexico also had an election this weekend, and they have their first female president in the history of Mexico. So congratulations to Mexico. Taking a look at Dow, somebody said, oh my God, Dow is falling. Yeah, no doubt. Quantbox is projecting it to drop below 38,000. We were at 40. And then on May 22nd, it became technically bearish. Well, that was 1, 2, 3, 4, 5, 6, 7 days ago, so a week ago. Yeah, of course. So here's the future statistically analyzed. If this process continues, then these are the numbers, 37,772. Does anybody like this tool? This is best case, base case, worst case scenario. Is it easy to read? Is it easy to understand? Do comparative analysis. How does that compare with the S&P 500? This one's choppy, huh? What do you think? Is this helpful to stay away? Yeah. Yeah. We're basically at the 20-day moving average, simple moving average. And statistically, you can see there is, some up in this. It's neutral to slightly up, but what it's analyzing is it's taking all these data points, and I used to have to calculate all this by hand, but you take all of these data points, and what you do is you compare and you create an average, and then you create a slope of the average. Okay? And I'll do this in gray. And what happens is you add these two, and then you add these three, and then these four, and these five. Okay? And you start adding these average, and then and you're averaging, and you end up getting something like this. That's the slope. So even though this is, to us visually, we are probably as traders feel like it's more like this, huh? Or maybe you'll throw this in there. And you're like, it's sideways. That is true. But statistically, it's also looking at the run and the rise. Okay? Run over rise. Rise over run is actually the formula. So you do rise, how much up over time. Rise over run. Okay? And you calculate that, and then you can project if that continues, it's going to continue at that price. And then you look at the deviation here to here, here to here, here to here. See? How far does price deviate? That's all. That's all it is. The other word for this is variance. Okay? And you're doing all these calculations. Can you imagine doing this by hand? Yeah, I've done it. Okay? And you're doing this, right? And so on and so forth. And then you do this one this way. And you do this one this way. And you're calculating all these variants, right? So y equals mx plus b. M is equal to rise over run. Okay? So that's your slope. Okay? You got the y and the x this way. That's what all this is. B is the intercept if you did a grid of the y and x axes. And then we calculated the variance. Variance. Okay? And you get a number for the variance. And then you square root the variance to get to standardized this deviation. Variance is equal to deviation. So now you have standard deviation. Take that and project that out to the new variance. You standardized all these variances to get a number that says when you get this far, it tends to revert to the mean. When you get this far, it tends to revert to the mean. So now we have the same variance on either side of the slope of the mean, which is standard deviation. We standardized this deviation instead of taking all these highs and this one little low. No, let's just standardize everything. And then what? Then you take that number and you go back to your slope and you project into the future. The worst case scenario, the standard deviation below the mean. The best case scenario, the standard deviation above the mean. And then the base case, the slope of the trend. But this can be deceiving because we know that under these circumstances, all of this is quite mediocre because it's saying if everything continues. But we're smarter than that. We know that this could go this way now, right? So your statistical analysis of past performance isn't enough. You still have to have an idea of where things are going. Now, is this trending down in your humble opinion? Yeah, you're probably looking at this, huh? You're like, yeah, you think technical analysis tells you it'll probably continue down, and you've already done statistical analysis and you can already see a negative slope. So if you're a bear, you're like, yeah, I'll sell it off the moving average, but what you think is more likely, okay, you're thinking more likely it's going to do this variation, isn't it? Technically. Now, if you're a bull, what you have to do, ideally, is you wait till to get above the average, and then it makes a higher low, and then imagine statistically now, you're changing the slope of the mean. And if you're a bull, when it's projecting down, statistical analysis of market conditions do not favor your fundamental bias. It's not a good time to buy gold. But that will change at some point in the future. And you have a tool that will help you quickly analyze the opportunity and then project statistically into the future the way that I just shared with you. Okay? So Abdul says, which means gold is flat. Not according to this, no. This does not look flat to me. Okay? And now, as I told you, like you take the statistical average, which is supposed to be a straight line. Let me see if I can do it. Let me do it this way. Okay. Okay. So that's the statistical average of the data set. But what if you used the moving average as your mean? And that's essentially like when I do moving average crossovers, okay, that's essentially what it's doing. Okay, you're replicating at what point do you decide to become a bull or a bear. So you can calculate the mean, that's a straight line, or you can use a crossover and just say, well, I'm a bear. And that's how I roll. It's a 21 SMA. Okay, on my charts I use an EMA, but when I added this, I couldn't figure out how to do it. I could do the simple moving average. Okay. But I don't believe it allowed me a choice of because I'm using an analytical tool to display things visually. In the background, I just have price and time data. It's just data. Okay, so I didn't know how to do the EMA. SMA is easy, right? Take 21 data points and give me an average. And then when a new candle comes out, drop the old one, add the first one, give me a new average. Easy. Okay, so cool, right? Cool. So I think what I'm going to do now that I'm thinking a little bit more, I just came up with that idea of the stock trading course. I know what I'm going to do. I'm going to add the stock trading course to the summer school and give everyone who signed up for summer school, they'll have access to that stock trading course. I think it's 12 hours long or something. And then when summer school starts, I'm going to turn it off. So you'll have 10 days to do the course, which means you have to sign up. You see? Clever boy, right? So I think I'm going to try to do that today and then send you an email. So for those that have already signed up to summer school, look for that. Although I think everyone that already signed up for summer school already did the stock trading course. Like you did both, right? But I'll add it. Yeah, I saw that, Bruce. Yeah. So I'll add that. Okay, so let's go back to the charts here. Oh, did I do oil? I think that was one I was going to pop on, and maybe I forgot. USO. Yeah, definitely not bullish. Okay, I would mark this. Okay. Let's go to gold. And we have more data than we do on QuantBox because QuantBox is just doing statistical analysis. If you wanted to do technical analysis, you need to use TRADARS. TRADARS does technical analysis. And it's very good, by the way. I mean, honestly, TRADARS is so good at technical analysis. You could sign up for it and plot all the patterns as they come up, plot them on your charts. And it'll teach you how to do technical analysis properly. Okay, so I'm looking at gold. Do I want to buy this? No. Done. 21 is below the 55. Okay? Here's how I want you to trade. Roderick says that's what he does. Yeah, and it's amazing. I mean, you've been around, right, Roderick? It's amazing how good it is. I guess at least, like, and it does things differently than what I would do, but I would guess 90% of the time it gets to the same conclusion. And I love the fact that it does it differently and yet generally agrees with me, or I agree with it. I'm like, and it's stunning how much they overlap by, like, my target is within 3 pips of its target. I mean, it almost makes me obsolete. Because there's no way I can watch 7,500 charts at the same time. Right? So anyways, what I want you guys to do is know, when the markets change direction. Okay? And in particular, this one here is the most obvious. So when you have that higher high, you absolutely, totally take this old top here, drag it across, and there's your buy. Okay? Then you get a new high. Okay, great. Look left. Drag it across. There's your new buy. Okay, so now what? Do you mark this one? Drag it across. So the idea at that time would have been this. But of course, it's an extreme high. It went way higher than the others. And so then it came down and it formed a different bottom here. Not here, here. And then went lower. That's a lower low. Off of a lower high, off of a lower high. So you had this extreme high, down on profit taking, lower high, down on profit taking, lower high, down on profit taking, lower high, lower low. Now, if you don't like that, that's called price action. The other way to do it is when it comes down to the moving averages, you buy. Okay? And when it breaks through, right? See, at this point right here, it's technically bearish. So I'm trying to get you to be a buyer here off this double bottom higher high. Okay? Higher high. Roll reversal. Higher high. Roll reversal. Higher high. Okay, lower low. I'm trying to get you to see these things. It doesn't have to be complicated. So if I want to be a bull on gold, I look at this and I'm like, no. Okay. Now I could play a little bit of a game here and call that a bottom, like this was a bottom, or even this as a bottom. And I could say, well, I want to be the first one long on this. Well, that's assuming a different risk. It's a higher risk, but if you get it right, you get a higher reward. So you're like, no, I buy it every time it bottoms out. Okay, well, you do you. Okay? Now what? I prefer this. Okay, let me do this. I'll tell you when I'm going to get involved again. Okay? You see where I'm going? If price makes a higher high, it'll come back and I'll buy it there. And I could do it over and over and over and over and over again, like this one. The consolidation, higher high, higher low, buy. Higher high, higher low, buy. Up, 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 down, down, buy. Okay? That's what I want for you. So that's why when I open this chart, I'm like, no. Some people are working on confidence, right? That's something you might be struggling with. You can hear my confidence when I look at a chart and I'm like, no, I'm done. Okay, there's no hoeing and humming and hawing. I'm not going to buy that. Okay. Cool. See, if you don't have a bias, you might say, well, Wayne, why don't I just follow these markets and just trade both ways? But what ends up happening is you're going to get confused in this spot. You're going to get whacked in this spot. Okay? And then you're going to sell down here. Okay? And maybe you make money or you get whacked. And what happens is you're always late. And the best you could hope for is everything in the middle. Okay? And so for 95% of traders that trade both ways, what I'm going to find is at the end of a year, and right, you're going to be break even. And what happens is you lose at the top, you lose, or at the bottom, you lose at the top, and you make money in the middle. Because you caught the third and fourth, so you got 2 here, then you give 2 back, then you get 2 here, then you give 2 back. So you win 2 at the bottom, or you lose 2 at the bottom, win 2 in the middle, lose 2 at the top, win 2 in the middle, lose 2 at the bottom. And just mathematically, okay, just mathematically, you would do better with direction. Okay? And when you pick a direction in the beginning, what will happen is you'll win 3 out of 2. Okay? And you'll work your way somewhere to 4 wins and 1 loss, somewhere in between that. Okay? Actually, the next step is to maintain 2 wins and 2 losses. But the thing is, your losses are small. and your winners are bigger. They're not big. I'm not talking about hitting home runs every time. But your win-loss maintains the break even, but you just give less back, and the winners, are a little bit bigger because your stops are in here in the beginning, and then you let these run. But then what'll happen is you'll get to a 3-to-1. Okay, a 3-to-1, 3 wins and 1 loss, and that'll be a typical day, let's say. But once again, your wins are bigger, and the loss is small. And you know what? Those 2 little changes will turn your trading into a career. Okay, even if it's 3 out of 2. Okay, you'll have a winning career. Okay, so 66% of your trades are winners. 33 are losers. Okay, your average loss is 30 pips. Your average is 99, let's say. Your average win. Okay, even if you stay at 50-50, like I said in the beginning, you're quite profitable. And much of this turn of events is from you starting to think like a professional. When you trade both ways, when you swing both ways like a broken gate, you haven't made any decisions. You're just following price. You need to know how to do it. But to get to the next levels, you make a decision on direction. You made a decision because you're a bull or a bear. And that's different. You know you're a buyer or you know you're a seller before you've done anything. And that change will change your statistics. But it also changes your confidence, right? Because you're like, oh man, I sold this 3 times and made money. And then I sold it the 4th time and lost. And then I sold it again and lost. And then I guess now it's bullish. So I guess I'll wait for that next dip. And, it's just 2 steps forward, 3 steps back. Or if you're lucky, 3 steps forward, 3 steps back. And you get nowhere after a year. Well, for many, that's a big improvement. And so once you get to that step, that stage of your career, the next thing is just pick a direction. So let's say I flipped a coin in January and it said, I buy gold. That was a flip of a coin for the year. Okay. So like you go back to here, this is starting to rise. Do I buy this? No. This is starting to rise. Do I buy this? No. This is starting to rise. Should I buy this? No. Right? Should I buy this? Maybe. Should I buy this? Abso-total-lutely. That is a no-brainer. Absolute total slap in the face. Like, oh my God, you're a bull on gold and you didn't buy it? What were you looking for? Okay. And now if all you did was put yourself in that situation and you start getting some of these, 1, 2, 3, the huge winner, right? And then it printed a low and then a lower high, so you jammed your stop here. This would be an out position, maybe for all 3 of those. Okay, so now you got 1, 2, 3 winners, and maybe you tried a 4th and broke even, and then took profit on these 3. So you got 1 loser, 3 winners. Great. And then what have you been doing ever since? Nothing. Not losing money. not wasting your time. Let me tell you, your time is valuable. Your time is valuable. How's silver doing? Okay, 4-hour chart. And not a bullish trend. So all you can do if you're a bull is this is like a maybe. I drew it last week. Okay, it's a maybe. You could do it. It's not a great trade, but maybe you're aggressive. Maybe you're more aggressive than me. Okay, that's fine. That's fine. Okay, inflation is double GDP. So you're like, wait, I want to own some metals. I want to own some physicals. Okay, that's fine. But you couldn't do it down here, for example. If price was down here, like, no. You can't buy gold at 28. Not on this chart. Now you can go to the daily here. And this is what allowed me to set this up for you. Again, I did this last week. So you already know it. You either made the trade or you're not paying attention. Now, I don't know if you pay attention. I don't know. Do you make it up every day? I don't know. Okay, so I did this last week and I'm like, there's a chance there. So you're in it or you're not? I don't know. Okay. Yeah, Eskimo, I got distracted with a bunch of my AI projects that are doing amazing work for us. And I say us because we're a community. Boot campers they're going to become TRADARS. I want you to know that. I have very, very big plans. I'm making big moves. I'm making big investments. We're all going to be part of the TRADARS community. I have stuff in the works that you have no idea. Like you're gonna look at me and go, really? Yeah. And the idea is that we're a giant community. We're not a giant community. We're just a community of successful traders. Yeah. So things like the gold course got put on hold, but I was meeting with people, I think it was in my swing trading group, and multiple people said they had problems pulling the trigger. I'm like, so when I do things like this, I'm like, so it dropped to the daily 21 on a roll reversal. Did you buy it? No. Why not? I'm like, why? I'm nervous, or I get upset, or I jam my stop so quickly because I can't pull the trigger. And I'm like, you can't pull the trigger? Okay? This is war and you can't pull the trigger? This is why you go to boot camp, right? You're like, yes, you must discharge your weapon if you're going to be in active combat, right? So I'm like, we need to fix that. So the coaching staff put together a summer school of active training. Meaning, can you imagine before you went to war? I mean, imagine you're going to be shipped off to Nazi Germany to fight, right? And boot camp was a PowerPoint presentation on how to throw a hand grenade and a PowerPoint presentation on how to fire your M1, a PowerPoint presentation on dropping mortars, a PowerPoint presentation on how to put a bayonet into somebody. You're like, well, I saw the PowerPoint. You're like, oh my God, wouldn't be a very effective training, would it? So this summer school is you're going to be on your hands and knees, crawling under barbed wire and pig guts and somebody shooting bullets over your head and screaming at you. And you're going to come out the other side and you won't have a problem of pulling the trigger. We will fix that. So that was the hardcore thing. Now, to do one on gold, yeah, it takes a lot more research. But to be honest with you, I will likely come to the community first and say, do you want gold or do you want a course on real estate investing? And I think real estate is what people want. And I know a boatload about it. Yeah. In fact, at Harvard, I had a problem with, I don't know who you talked to, was it the school or the registrar? I don't know. But there was a problem. They were supposed to give me an additional credential, a designation of being a real estate expert. And they wouldn't do it because I used one of the real estate classes as part of my graduate studies in finance. And they're like, you can't be, your specialty, you can't count them toward finance and be designated a finance expert and then go ahead and say, well, you took all these classes and you're also an expert in real estate. They're like, you can't double dip like that. I'm like, I never chose it. And I have way more enough credits to be a financial manager, right? Like I took all those classes and then some. So I'm like, take it out and just apply all my real estate studies to real estate and give me, the management degree, the focus on finance, and then give me some designation in real estate, which was residential and commercial real estate and real estate finance and all that kind of stuff, right? And they're like, no, we're not going to do that. So anyways. And there's an interesting real estate class that I almost took at the London School of Economics. And, maybe to get warmed up, I'll pay I think it's $5,000. I think what I'll do, if we do a real estate course just to kind of warm up, I still have all my real estate textbooks, though. I have probably $1,000 in textbooks. But I'd probably take the $5,000 course at the LSE and then come back and then having warmed up and gone through everything again, create a real estate course for you guys and charge like $150. I'll pay $5,000. You pay $150. Everybody's happy, right? Oh yeah, we could. Well, there's some interesting things. Like one of the things I'm struggling with, and Jim, you could probably help me with this. is like when we transition everybody over to TRADARS, we have an opportunity to make some changes, right? Like right now at boot camp, we got day trading and swing trading, and they're radically already changing, right? Now I got like the fundamental Tuesdays, and we got the stop, look, and correct Wednesdays, and we got our swing Thursdays. You know, how do we handle all that? And what do we want to do in the future? And I got some ideas, but it comes down to, like, as a community, what kind of changes do we want to make there? And there's some really cool things that we can do. Cool. All right, so going back to this, okay, one thing that I teach you guys over and over and over in the live groups at Investor Bootcamp is leaving notes for yourself. And I think we had a conversation with Johan about this as well, and he does, and he keeps very detailed notes. I leave little love notes, like, you know, like if I drew something like this, get rid of that. And then I think I could even keep this a little further. Okay. There you go, right? So there's the future. And if it starts to behave like what I'm predicting, in my book, I call it my mind's eye. I recognize what's happening because I've already seen it. With my eyes closed, I'm drawing it now. I see it. So if it starts doing it, I recognize it. And I'm like, oh, yeah. And then I can go to a smaller time frame and say, and this is harder to see, but I have an X down here. See my X? This is the X. So on this smaller time frame, remember, it looks like it's sideways, and we talked about that. Sideways, sideways. But on the daily, I see it differently. And I'm leaving myself a little love note here. And if I spot, I don't know, an inverse head and shoulders, could I try? Puts this in a different context, doesn't it? Okay, so now I got that going on. All right. So now you drop into I don't know, what do you want? 15-minute chart? 5-minute chart? We'll leave it here. And this is usually where most of you trade, right? A 15-minute chart. But notice again my X is here, and that this is the roll reversal. This is an RR, a roll reversal. What used to be resistance is now support. And this is the daily 21 in an uptrend. Can I try? Can I start building? Can I play the inverse head and shoulders? I can consider it. Okay. What do you think? Okay. And then let's look at a different point of view here. Do I even have a gold? I just want to pull up. I don't want to mess with all that since I just did it. So let's just do a USD yen. Oh, good. I already got the. Let's change this up. Let's do a template like that, price action template, and then let's make it silver. Okay, and we have, here's the role reversal, all that. Okay, same. And now you drop in here. And as long as you're above the 21, you're playing it, aren't you? I think this is set, yeah, anyways. Okay. Can you see all the little tops? Connect the tops. The next break is going to be here. Why do I connect these? Well, if I'm a bull, I think we're going to make a higher high. So why do I draw it? Because I'm afraid it won't make a high high? No, you misunderstand. I draw them because I'm going to buy it here later. So I draw that as a bottom. Now, usually what I'll do, though, is I'll wait for it to make the higher high. Yeah. Okay, climbing the stairway to heaven. Okay. There's the inverse head and shoulders. See, very basic technical analysis, isn't it? But what makes money, what will make you money, is that this, like I said on a different chart, this is a role reversal and the daily 21. And then I would add inflation is greater than GDP. Y is nominal GDP. Inflation, is greater than Y. What do? Okay. XA, in this case, G. Okay. I don't know how you make your decisions, but you must make decisions. How am I doing today? Was this a good live stream? Is it going all right? Well, 50% of people have not clicked the like button, so it seems very mediocre. Seems like a C minus. Maybe a D. So my daughter finished all her classes for the year. She's got 10 AP classes. She had to take all the AP tests, advanced placement. Right? She's in high school and she's done her first year of college. That's a lot for a teenager to finish a year of college classes. But the cool thing is I have 2 fire pits on my property. And we got together on Friday evening after her AP test. Or was it Saturday? I guess it was Saturday. She took, she did SATs, right? Ooh, so much testing. And she just bonkers after all of that. So we got together by the fire pit and we burned all her homework. Sorry, liberals. Yes, we changed the environment in a negative way. But, boy, what a stress relief to be able to just burn all that hard work and let it go. Yeah, it was quite cool, in fact. There's pages and pages, right? Like all her handwritten notes and all her cue cards, all her papers. It was really cool. I said no to the textbooks, though. Don't burn the books. Yeah. 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 So these kids of mine are learning ridiculous, sickening work ethic, and they're getting A's. Yeah. Smart kids. Hard workers. All right, still 50% of people have not clicked the like button. So I guess that's it. I guess we're all done. Cool. So day traders, I'll see you at 4 p.m. in the day trading room at Investor Boot Camp. Right on, Jay. Welcome to the family. Yeah, so one thing that we do at Investor Boot Camp is we have a day trading group and we meet. We met last night for the Asia Open. And so we'll meet today for the U.S. close. So I'll see you over there. Peace on earth. May the pips be with you. May your profits be above average. Remember, you have tradersway.com, investorbootcamp.com, quantbox.co, tradars.co. We have summer school coming up. There's a lot of help available. Mediocrity is unacceptable. So I'll see you soon.